Happy December and welcome to MyStockScanner Live. While the world gets festive, the markets stay busy. Let's unwrap the signals hiding behind the noise. We use our 3-point playbook to analyze every stock that we have, and that's also the rule book for our model portfolio that this morning sits at 33.7%. Hans-Henrik Nielsen, today we get fresh numbers out of the US, and we talked about it before the show that, in fact, this can be a no-win situation. How come that?
That depends a bit about how market takes it, but if it's really good, if there's a lot of jobs created, it could make people scared that interest rates aren't going down. So even good numbers could become bad numbers, you could say.
So in the midst of this losing situation, Liam Flavel, it's a coincidence that you're up next. I want to emphasize that. But we're looking also at AI is getting pounded at the moment. Broadcom is just on a tear going down. Is there any relief in sight?
No, and I guess that's why you're all in black today for a funeral for Broadcom or something like that.
I'm dressing up for the job numbers.
No, it's there isn't much in sight at the moment for AI. It's a tough market, and it's been priced to perfection. Now it's no longer priced for perfection.
Well, we shall dig into Broadcom as well and see if there's any chance that to catch a falling knife without getting our fingers cut off. And apart from talking about the job numbers here on the show, there could be a nightmare coming. We also have our signature Tuesday poll where we ask which stocks will make a comeback in 2026. And since we are on the subject, can Broadcom turn around? Liam Flavel will try to give an answer. We had earnings from Per Aarsleff, Danish Per Aarsleff. We're going to take a look at that, and then we're going to take a look at Tesla as well, because they are really taking off positive yesterday, maybe going to the moon or Mars or wherever they're going. And then we'll ask if we finally get to see lost PayPal back into action as they're turning themselves into a bank. As usual, number of the day today, $4,175 is number of the day. I'm not sure that 4,175 new jobs will create anything positive in the US, but Hans-Henrik, we get some job numbers today. What are we expecting?
Well, first of all, it's nice finally to have some numbers because, with the shutdown in US and everything, things have been delayed. But we can expect a lot. When you look at the lists, and you can find that, I found these on my FX book here, be aware that there's still a lot of numbers coming out for September and October. What we are looking for is the November numbers. And well, we really want to see some good numbers if we are to believe that the US economy is doing just fairly okay. But I'll comment them for the members on my stock scanner. So I'm not too optimistic, to be honest.
Well, that's a lackluster of a start to the show here. Let's see if we can brighten the mood a little bit. Liam, I know that this might not be the brightening of the mood because I want to talk to you about Broadcom, and it seems like they just can't stop bleeding. They came out with good numbers last week. Market just pummeled them. Even the expectations for next year were positive. Market still pummeled them, and it keeps going. What's going on, Liam?
Yeah, I'm not going to cheer you up on that one. Basically, it's called margin compression. That's what we're looking at. And you can see here just very quickly, let's see how far they're down. So they peaked a few days ago last week. And we're only talking about a few days, but they're down 18%, which is quite a large number. You can see that it's actually below the green line, the 50-day SMA that we use to really work out whether something's going to bounce. The stock has actually bounced on this support level here in the past, quite a few, 1, 2, 3, 4, 5, maybe 6 times. So this one could hold. If not, it's down to the 200-day SMA on the black there. What's actually happened with the stock is, they had good numbers. They've had a fantastic run over the last year or so because they basically make specialist chip designs. They don't actually make the chips, they make the designs. They're sort of like Formula One engineers that you go to and say, build me this race car. And that's what they do. They build an AI race car chip effectively that is very, very good at certain things. So companies like Amazon use them, Microsoft use them, Google use them to an extent, though they are looking at other suppliers as well. What's happened is they have produced very good pretty good guidance going forward. Is where everyone expected. What has actually spooked the market a bit is something called margins. So you've got the gross margin here and the operating margin. What the company said, these effectively tell you how profitable the company is for every pound that they spend. So the higher the margins, that basically means the more money that's been generated out of that particular activity. The gross margin is taking off the cost of goods. So the what actually goes into making this stuff as physical goods, maybe as contractors and things like that coming in and doing their work and doing their magic. That's the gross margin. The higher the better on that. The operating margin takes into account the company's expenses. So the AI sort of the salaries going out, the loan payments and things like that coming back in. What Broadcom said was they could be 1% down on their margins for the next year. So that effectively means they're producing more chips, but they're getting less dollars for every chip coming in there, and that's what spooked the market. Analysts hate that, absolutely loathe what's called margin compression.
And to cheer you up, Liam, I'm going to ask you about Micron later in the show because they're coming out with earnings tomorrow, and then you get another chance to cheer us up because this, well, I didn't really like that, but sorry, that's how it is. What we're also going to talk to our members about and our viewers about is that we have our Tuesday poll. And the Tuesday poll is this Tuesday about comeback stocks. We have collected a few stocks for you that you're going to get to vote about. You also get to put in your own candidates in regards to which stocks that took a pummel here in 2025 might be coming back next year. And I'm going to start with you two. Hans-Henrik, give me a stock that was pummeled this year and can make a comeback. Oh, there we go.
Yeah, I'm a bit on the red and white national scene here. I have a feeling Novo Nordisk will do fairly well. It's still a fantastic quality stock. They have tons of products in the pipeline. Looking at the valuation, it's always hard to say when a bottom is reached. Up here, we said it was priced for perfection. And now it is basically priced for disaster if there is something like that. There are competitors coming in, there are other products coming in, but I have a feeling that is almost priced in. We're not buying it just because we think that, but there could be an upside from these 320s up to just below 500. That is my guess. We'd never know where stock will go.
Yeah, I was reading over the weekend about Eli Lilly coming out with they're researching, or it's in early trials at the moment, a 2-part receptor, whereas this is just a GLP-1 receptor that are in the current weight loss drugs, and they're supposed to be a paradigm shift ahead of what we've got now. So
my point is, up here it was too expensive. Down here, I think most of the disasters have been priced in, and now they can almost only surprised positively. That's my guess.
Well, Liam, very, I won't say nationalistic because that has a wrong sound to it, but what are you going to bring up since Hans-Henrik brought up Novo here?
I hadn't thought nationalistic. I should have gone for Guinness again, shouldn't I?
Yeah, you should. But then again,
sorry. I'm actually going for Trade Desk. I'm going on the ad side of things, on the tech side of things. It's a company that hasn't really done particularly well. They put some guidance out that wasn't great in this year, and they got really pummeled for it. What a lot of companies are looking at here, or what a lot of investors looking at, is saying, if you've got a tech company that does these sort of things, with AI coming in, AI is going to eat their lunch effectively. It's going to be so easy to just replicate what these tech companies do, and they won't need them anymore. And that's the same with CRM, which is Salesforce. The same with a lot of companies out there. And it's just the problem with the argument is it's complete bullshit. The head of the guy that actually designed Claude coding, Anthropic AI, is one of the foremost, the forefront leaders of coding for AI coding. He actually basically said it's not up to the job at the moment for actually producing proper code that we'd use in a live environment. And I said that last week as well. When you look at Trade Desk very quickly, you can see it's a hugely high quality company. 98, you've got earnings per share going up through the roof. You've got the PEG ratio at 0.3, showing there's lots more to come. Analysts don't particularly like it, but they haven't really downgraded it too much in the last few months. From a valuation point of view, I mean, it's rock bottom down here. But even if we drop it down here, we've still got 6.6% upside for next year. If it goes up to where it was a few months ago, you've got huge upside there. The problem is, we're not catching a falling knife. It's got to get above the 50, probably up above the 200 before we even consider it.
I'm going to arrest both of you in regards to that you, Liam, chose a stock that went down this year. So far this year is down 69%. That's almost impossible not to turn around. And Hans-Henrik, you chose Novo, which is down 50%. Let's see what our users can do when they get the chance. When we put it up on the Tuesday poll, you will get your say. You can vote on these candidates that Liam and Hans-Henrik had, or you can put in your own. A candidate that's definitely not going to be amongst those is Per Aarsleff, because they came out with numbers today. And Hans-Henrik, I know that you took a look at them, and we are up about 3% right now. They were up about 4% earlier today. Per Aarsleff, is that a good stock?
It is. We ask ourselves in the 3-point playbook, is it a quality stock? And it is. They had a absolutely fine, they went up in revenue, I think it was 4-5%. Their margins are expected to be fairly good. So the quality is good, and what we're looking at, thinking a bit ahead, is that if there is a peace deal, some sort of thing in Ukraine, there could be some part for construction companies like Per Aarsleff. However, what we look at right now with the pricing is here that they are normally bouncing up from a point around 7-8 in price earning, and they are normally being pushed down from a price earning level in the 15 to 20-ish, and they are in the 15 to 20 area right now. I would personally not buy it now. If they should go down to price earning of 7 to 8, which it's not certain, but if they do, it has happened several times through the last 10 years, they should almost be cut in half. And upside wise, in the bull case, there's only 6% over the next year. So definitely not a stock I would touch right now. Doesn't mean it can't go up, but the reward to risk is simply not good enough.
And as said, in the morning, it was up by 4%. It's sitting around 2.7 right now. That's where we at. Another stock that had a good day, probably not, I won't say to the moon yesterday, but it went up by 3.4%, of course. That is Tesla. We will get to Tesla in just a little bit, but I have some sort of, can you say, intro to it in that sense, Liam, that we had some news from EU in regards to EU giving up on the emission standards, that they were going to lower them, that we are not looking only at electrical cars in the future.
No, they were planning to ban the sale of petrol cars from 2035, petrol and diesel cars, and they've now said we're not going to do that anymore. So they're firmly going to start killing sort of polar bears and baby seals after 2035. It's basically the car market, the vehicle market has been turning around and saying this will kill us. With China coming in as well, we can't survive doing this. Also, EVs are very expensive, so that's part of the problem. Ford came out as well. They wrote down $20 billion of investment they put into the system, so they're no longer producing their, I think it was a T3 pickup truck that was supposed to be the next gen, and they're moving their battery facilities into more battery storage, a bit like Tesla had with their Powerball. And I know that's all the time I've got to talk about this because he wants to talk about Tesla for the next 20 minutes.
Here we go. No, I'm not going to give him 20 minutes, but Hans-Henrik, I know there's also a little bit of it's not a true story that you hate Tesla. You might dislike the owner. That's a different story. But the stock itself, let's take a look at it. It went up a little bit yesterday. A little bit. It went up 3.4%. It's not going to the moon. It's not going to Mars. Where's it going?
Yeah, I'm glad you say that about Tesla, because I don't hate Tesla, not at all. It's actually a fairly solid company. They have been pushed on their margins and so on lately because of all the competition, but they have actually been a fairly solid earner for some years now. What I don't like about the company is the way it is priced and the base it is priced from. Because what people are basing the current price of Tesla, and let me say right away, I'm not saying that it can't double or triple or 10x again. It possibly can. But the thing is, right now, it is priced from what Elon Musk is telling the public. For instance, the other day it was pumped up because he was out saying here in January or February, or when it was January, I think it was, in Netherlands, they are actually actively testing our full self-driving to be functional on the roads. And the stock pumped up. And then both Netherlands and EU were out saying that is completely bogus. There's no such thing. They have asked if they could come over and demonstrate it for us, and we've said yes. But it's just, that is a story all the way through. It's about 10 years ago, he promised that within 12 months, they would be able to drive a car across United States in complete full self-driving. Engineers are coming out saying at that point we couldn't even get it to follow that white line in the side of the road. So it's just built on stories. And right now, the pricing of the stock is based upon them being the winner of the electrical vehicle, winner of full self-driving software, winner of robotaxis, that they can take over the entire taxi market in the entire world, that they can take over the entire Uber Lyft market, and that they can win the humanoid robot. I mean, monopolize it. And there's nothing that indicates that. If we just play around with the numbers, just quickly in what is called a discounted cash flow model, if you want just a decent 10% return on your money the next 10 years, Tesla will have to grow their earnings per share by 54% per year the next 10 years, every single year. That has never happened in an S&P 500 stock before. If they lower that to just 40, which is more than they're growing their earnings right now, the price right now should be below $250. It's almost at 500. So that is, you can see the average for the last 3 years, they have been able to grow their earnings with 14%. If we use that, the stock should cost $43. I'm not saying it's going to $43. I'm saying it is priced completely out in the blue. So, and that is why I'm not buying Tesla, because I am not buying stocks where every single ounce of pricing in the stock is based on the fact that you have to believe Elon, and he has basically been lying or exaggerating for 10 years straight.
I think I have a better option. I think that we can register you as alternative energy when you talk about Tesla, because the warmth that you exhume from that can yeah, I'm gonna say heat up all of Viborg where you live, basically. If we should be buying Tesla stocks, we could do it with PayPal. That's the old sort of, I won't say old world, but they were one of the first ones in regards to payments online. It was a good form. Liam, now they are looking to become a bank.
They are. And
what is that going to change? What is that going to change for them?
It basically gives them access to money. At the moment, they have loads of deals out there with Visa, MasterCard, and other banks out in America and worldwide. So whenever they offer deals, whenever they loan to their customers, they have this middleman in place that they have to give a share of the profits to. In the same way, they don't actually hold the customer's money. They can't make direct loans to the customers. If they can do that, they capture more about the customers. They know more data about them. They know their spending habits. They can lend more to them. They've got a captive market there that they don't have to share with other people. So that's why they're doing this. PayPal, as you can see, it's not been a great investment for quite a while now. It's sort of come down this cliff and is trying to come out the other end, but failing miserably at the moment. I've just set my value chart here to bounce off the red line where we are now. So that's the lowest it's been, I think, ever. So yeah, if we just go back in time a bit, so this is it's really not a stock that's doing particularly well at the moment, but it doesn't take much to actually push up. We're saying at this point the worst case scenario is a 6% upside, and the best case is probably just going up to the highs in July this year, and that brings us up 56%. And the analysts are saying we're going to see 31% increase in earnings this year and about an 8% next year. So it's an interesting stock because it's also a very high quality stock. As you can see here, everything is pretty much green across the board. So from our first two questions, is this a quality stock and is it undervalued? There are big ticks in the box on both sides there. At the moment, it's below our moving averages. It's using those, and it's red on our MTI, which is the momentum indicators for the daily and the weekly. So we wouldn't touch it right now until it gets above 70, 65, something like that, and then we'd definitely be interested, I think.
There's no doubt that this is going to help PayPal regain some of their strength again if they get the permission. And what they're looking for is not becoming a big bank. It's basically just, as you said, having saving accounts and making small business loans. I know we're in the guessing game here. If they do that, is that where we will see the bump and regain of strength back to their old
potentially? Because I mean, what's really happened when you look at the earnings going backwards, we can see that actually there's a good progression there. It dropped in 2022 and then has come back up again. So from that point of view, the company has been trading at much higher multiples than analysts are suggesting they do now, and that's the change that we will see. Because if suddenly the market pushes it up to, say, even the 3-year average for the stock up to 23, you suddenly see 125% increase. So it's about investor appetite on this one. If they start believing the company is going to start doing well and that they can believe their earnings, then yes, they will go up. But that's a difficult one when everyone sort of doesn't trust them at the moment.
No, you're absolutely right. And again, we're not in the guessing game. We analyze each stock. We look for the quality, we look for the potential, and we look for the timing. And right now is not the right timing when it comes to PayPal for sure. I mentioned a number in the beginning of the show, which was $4,175. That is the cheapest ticket that you can get for the World Cup final next year in the US. It translates into 3,119 pounds sterling. And so far, I haven't heard Liam at any point saying football is coming back. So in regards, we're not going to talk about that football is coming back. As Casper Schmeichel said, has it ever been back? So that's the question right now. Let's instead look forward to next week. Hans-Henrik, or the coming days rather. Hans-Henrik, you will be ready later today in regards to job numbers from the US, and you will comment on them.
I'll comment on them. That is in an hour and 10 minutes. We are getting the numbers there, job numbers. We'll have a look at some of our own calculations on the NFP numbers. We are taking some more important, smaller parts of the NFP numbers and adding them up together in our own little mix, and actually seeing if we are on our way to a recession in US. So our members can look forward to that.
And when we look to tomorrow, Liam, you will get another chance to brighten the mode in that sense that we have Micron, MU coming up, also one of those stocks that has been, in that sense, been the fave of all AI. What can we expect tomorrow?
I think we expect some good numbers. I've written for a couple of weeks now about the memory shortage, and Micron is one of the 3 big companies globally that's making AI memory effectively. They've recently announced they're closing down Crucial, which is a consumer arm of memory. So they're moving all their manufacturing into the AI side of things because that's where the money is right now. And memory prices memory is going to be in demand for the next couple of years, and supply is going to be lower than demand. So that's always a good indication of where the money is going to go.
And we'll definitely keep you posted. And you can look forward to Thursday when Liam is back on air at 1 o'clock together with Hans-Henrik for the English version of MyStockScanner Live. And on Thursday, we, of course, include the Thursday Tech. I wonder if it's about MU. It could very well be. And then we have on Friday, we have members, or rather, we have earnings from Paychecks, which is a highly bought political stock. MGG is one of the persons who bought the marriage. Taylor Green has bought a lot of stocks in that company, so we'll keep an eye out for that. Remember, articles on Index is found on our pages, also on Facebook, and follow up for all news. Liam and Hans-Henrik will keep you posted, and write us for questions, FOMO@mystockscanner.com. Liam, we'll see you on Thursday, 1 o'clock, and Hans-Henrik, I'll see you tomorrow at noon for a Danish version, another festive version of MyStockScanner Live. And it doesn't matter if your stocks are naughty or nice, we can keep investing and we'll keep you clarified in regards to how they're doing. But everybody, happy investing. Take care. See you guys.